to you, Larry.
Everybody's talking about the rate cut, so let's get that out of the way. What do you think they will do?
Well, definitely, just like you've mentioned, we are seeing very key indicators that we might see the rate cut coming down, just like they did last time,
right,
especially due to the inflation levels, which have really remained steady at below 10, which is something the central bank has been very, very key on. And also looking at it in terms of, I think the only concern would be the foreign exchange, which has, as you mentioned, is a bit of a risk level at the moment.
And it hit a 2-month low yesterday because everybody was just expecting what will happen today.
Yes, Larry, definitely. And I'm sure because of that, we might see a bit of reaction on that front. But hopefully, central bank will also be very keen on ensuring that the foreign exchange levels do not get to those levels that we saw earlier on in the year.
Read for me this. The central bank is also going to sell a new 15-year treasury bond seeking for up to 15 billion shillings, and it says this is majorly for budgetary support, a fixed coupon rate of 11%. What do you make of how likely this is?
Well, I think one of the things that has happened, especially the last 2 years, we've seen the interest rates, especially in terms of the treasury market, really become unstable. And for them to come up with a 15-year bond, I think what they're trying to do now is to stabilize the interest rate levels, because last year or earlier on in the year, we saw the interest rates even for a 91-day T-bill going up to 20%.
Yes.
And so central banks stopped doing long-term bonds. But for them to do a 15-year bond, they're already trying to stabilize the yield rate, and definitely that's a good indicator that if you're doing 11% for 15 years, you should see the rates coming down steadily.
So the coupon rate of 11% is not too bad?
Definitely, I think that's a good indicator, especially for the market, but most likely, I think also in terms of the equities, definitely there's a bit of shift now. We should expect people now to shift back to equities.
And then to give a bit of confidence to the market, it will be on sale between September the 4th and 18th. The auction is on the 19th of this month.
Definitely, I think also look at it from that point. Yes, we are seeing the market also. I think what central bank is doing is trying to measure the interest in terms of long-term debt, and also in terms of the yield levels of the market. And yes, definitely for that, it will be a good thing.
Okay, let's move on to Kenya Airways. Every single day on the show for the past 2 weeks, we've had something to talk about Kenya Airways. Perhaps none as dramatic as today, where the first 150 of the staff have been let go. Kenya Airways says they voluntarily left, but everybody else seems to suggest that they will let go in unclear circumstances. Some were called from overseas duties and told, this is your letter, it's been real, cheers.
Well, looking at it, Kenya Airways and what you've been seeing on the corporate scene, even I'm sure you've noticed about the discussions about stockbrokers laying off. The challenge we are seeing this year is because of issues to do with performance and also growth. But particularly for Kenya Airways, it's been on the spotlight because they just had a rights issue. Yes. They have a very clear long-term strategy, but also they're given a profit warning because of challenges they are facing. And so just like any other corporate, definitely for them to sustain the bottom line, some of the things they have to look at is operational efficiencies, which I think is something they're trying to position themselves for. So if I would look at it from a management point of view, I would understand where they're coming from in terms of ensuring that they're efficient as an airline and also competitive.
One of the union officials said yesterday that we have never been against a wage cut. If the wage bill is too high, they haven't discussed the possibility of cutting our salaries or some other way, trying to manage this. They just went ahead and said, you know what, we're going to let go a few people. We're trying to save 1.2 billion shillings here.
Well, that's another way of looking at it. But in terms of the headcount, I think for most corporates, the more people you have, the more space, resources you need to still keep them there. So I guess the challenge for KQ right now is to be able to still remain operational efficiency and also at the same time sustain the kind of headcount that will be able to keep it going, especially now that they're thinking long term. I think the challenge you need to do right now is go back to Operation Mawingu and try to understand what KQ was trying to really work towards, especially in terms of sustaining their growth.
The other risk of this is that you risk infecting the entire workforce. Even those who are working might fear that our jobs are next to the line, and if you have strike action like the last time we did, that was very debilitating. They don't want a situation like that. The Prime Minister has even said, please put a hold on to this until we can discuss it some more.
Well, look at it in terms of Kenya Airways. I think that's something that the management of Kenya Airways has been very, very keen on. And I think one of the things that the approaches they are using, there were news yesterday that there are some people who have gotten a pay rise. So I think they're trying to look at their, what we call Pareto principle, ensuring that they still sustain the people who can keep the airline going, but they can be able to still replace those people who can be able to be let go.
Okay, let's move on to CMC Holdings. It's one of the car importers that has had a very checkered history. Now they're losing the exclusive Ford and Land Rover contracts. This might not look like much in the face of it because just a bit more competition. But should we be reading more into this than we necessarily are?
Well, CMC, just like you've mentioned, has been on the spotlight as well, especially because of the corporate governance issues. And it's not a surprise that they're losing some of these the contracts that they've had for quite a while because of those management concerns. And looking at it in terms of how they are addressing some of of these things, it has taken quite a while. And so because of that, we would expect the market as well as some of these people to raise concerns about the sustainability going forward of the company. But look at it in terms of the business, they even raised from such counters. I guess we might not be able to get that kind of information right away, but it's already an indicator that CMC really needs to put it out together, or else it might continue losing business.
That is a good one. Finally, tell me about this broker back office system being launched today. Explain it to me like I'm a 3-year-old.
Well, what has been happening for stockbrokers, we've had a lot, for quite a while. All brokers have had separate ways of doing business and even managing their back office systems. But like commercial banks, we're trying to develop a system that can be standardized or across the industry, and also that can also be adopted even within the region. And that's something that we're trying to work on. And some of the key features of it is online ability for people to be able to access the market online and to trade, and also a very standardized system that ensures that anybody can be able to work in any stock brokerage firm, either here, Kenya, Uganda, and even Tanzania.
You know what I miss? The red jackets. Those were good times.
Yes, definitely. I think we might still keep that, because for tradition's sake, we do have such things during occasions. But definitely, I think going forward, we're trying to see how we can still sustain business.